Yes, boys. So today we're going to be going over trend lines. Now, trend lines are one of the most simplest, yet one of the most effective tools in any sort of technical analysis, and that's because they help you identify the direction of the market and key levels of where the price might react from. So, what is a trend line? Now, a trend line is a straight line that's drawn on your chart that connects two or more significant price points. Now, in an uptrend, like we are here, a trend line is drawn from below the price, connecting the higher lows together, as you can see here. So, you've got your higher lows here, connecting and connecting. All higher lows are there connected to this trend line. Now, in a downtrend, it's the opposite. It's drawn above the price that connects the lower highs together. Now, the key is with trend lines, it's not just a random line. It actually reflects the market's momentum and structure. So, the more times price respects this trend line, the stronger that trend line becomes, and the more times you'll see it be respecting this trend line. So let's quickly talk about how you can actually draw one. So you need to start by identifying the most obvious trend. So in this scenario, you can see prices moving upwards. Now in a uptrend, you need to look for your first two higher lows within that uptrend and connect them with a line that extends forward. So there are your first higher low connecting to your second higher low and then extended upwards. Now for a downtrend, it's the opposite. You need to find two lower highs and do the exact same. Draw them from your higher high to higher high and extend that line right. Now, you always need to make sure that this line does align with the market's direction. So make sure it aligns with an uptrend. You can't just go and say we're in this uptrend. You can't start drawing a line downwards because you're in an uptrend. Now, what actually makes trend lines so powerful, and what is price actually interacting with them for? Now, they often act as a dynamic support and resistance. So it's not just one key level, it's in a line diagonally. And if you're in an uptrend, price may pull back to this trend line before continuing higher up. Now, in a downtrend, price might retest the trend line before heading lower down. But the thing is with trend lines, they're not perfect. They can break, they can slightly dip below it, and when it does break, like when it fully breaks the trend line, it doesn't always mean it's a reversal, but it will give you sort of a sign to reassess the market's direction using your larger time frames, for example. So the best way to actually use the trend line is alongside other tools. I would not recommend just entering off of the retest of a trend line. So you should combine them with things like support and resistance, Fibonacci retracement, candlestick patterns, or things like that will give you a confluence to that trend line. And if you can add confluences, as many as you can, to the trend line, it will make you so much more confident actually going into the trade, and it will build your trade setups to be much stronger. So start practicing with trend lines on multiple time frames, and the more you use them, the more you will eventually just get better at identifying the trends and potential opportunities. So I hope that's helped you sort of understand another concept within trading, and that is trend lines. So like, subscribe, and I will see you in the next one.